I think it's called like.
You know they're not close, right?
It's called like a.
Medium in Scottish.
Maybe like you want to join us or anyone else.
You can't agree. Today we do the thing.
You know, it was quite intense with that. I mean, what both my
The one that Eugene uses.
yeah, like really interesting. I totally love it. And it was now, but like recovered a little bit. But it was intense again. Like, yeah. Other than that, it was relaxing.
Are you free after class?
I got class till 6.
Yeah.
to like.
I mean, I did get my
3 hour.
Yeah, so, but it was good. You didn't have any plans this morning.
I mean, like, I had class. So
There's two days a year where I'm not available. It's the 14th of June, 30th of March. Not available. There's 2 days.
Is that
When are you going?
That's February. And my other best friend's birthday.
Everyone's good.
16th of August.
Then it's not far, but it's kind of.
I'm not that big. They don't really care. It's not like they look at it and they will be like, basically.
Why were you even focusing on
when?
Yeah, I mean,
It's gonna be good. Because
No,
Monday.
Monday.
The 26th is the marathon of London, so it's gonna be good to be either London. And because like I don't do
Chemistry is
no, it's very competitive. It's like with you are like something prepared to it's like a lottery very much.
I did get it.
one of these, one day. Maybe 25th or maybe 80th.
I think about it.
Yeah, we're also like building all like
Do you look at LinkedIn?
yeah.
LinkedIn.
Clothes? No, that one I'm not sure. What I see is casual clothes, but maybe there are some specialty stuff. But it's a good place to just
If you go any other
okay.
what's your essay?
Yeah, I just start tomorrow.
1,500 words.
Yes.
Never know so
Yes. Each student's not
doesn't count. Oh yeah, 2,500 words.
I was so but I did you tell me too. No, I mean, if you can even copy. Yes.
She said most of the course.
Okay.
I guess she's asleep to put out the flag.
Yes.
After that, she say, I say, you can let me know what she says. She has not yet. She also said that they will not come in the fight.
Okay.
What are they doing right now?
I'm not sure yet. Or I will just say that you are in multimedia or something like I was exactly. Exactly. That's what I like. Even if it's small, it's
What is the big thing?
no same. The small double. And the floor doors are nice.
All four figure out.
Yes, but the two flats there are the ones, the regular ones, the ones that are reception. I think there are two studios and three separate staircases. Probably three rooms.
Which I could make from that. Also, haven't, guys. Stayed there. Nice semester. Oh, is it? No, as in, do you not have classes? Oh. Why are you not happy? Have you got classes and such? Are you doing the derivatives one? That's what it's so interesting. And I wanted to do it. Like, if I hadn't done it easy. No, please. I'm sorry. Please, no. Unless I get credit for it, you are not submitted to her. No, I'm not one of those people. Sorry.
Thursday.
I didn't get the gist. I'm still fighting with her. But
The weather was so.
it was so tiring. Like all day. It was such a.
Right, good afternoon. So as I said last week, I'm going to devote today's lecture fully to this, almost fully to this topic of APP frauds, which is very much in the legal news and even in the non-legal news. It's in the legal news because there's been a lot of cases and there's also been a statutory development. It's in the non-legal news because it's happening a lot to people, and it can create quite a human interest story of sadness and even great distress. Basically, it seems to be the case that the less desirable elements in society decided it's well worth pursuing the career in scamming because of the enormous profits that can be obtained thereby. And if you can also do it in a way where you can be reasonably sure you won't ever get arrested, and you can do that by either using sophisticated technical means to make sure that you're too remote from any detection, and or you can do it in a country where you can simply bribe the authorities to not arrest you. Basically, the authorities in those countries become partners in the crime, in the scamming crime. They're basically getting a dividend from looking the other way or giving advance notice of any raids, so that the worst that can happen is that the scam centre has to relocate, but they're never going to get arrested. Certainly not the higher ranking people. Well, let's do the law first. If we've got time, we'll talk about the way that these scammers can operate. But the main thing that we need to teach you is the law relating to this. Now, obviously, this is a case of two innocent parties arguing about which one's going to bear the loss, because, of course, legally speaking, the scammer is liable, but you're not going to get any money from the scammer, so it becomes a battle between two innocent parties, which is usually the victim of the scam on the one hand, and one of the banks that paid out. Usually that would be the paying bank, but sometimes it's the receiving bank that received the scam monies, that is obviously not the customer of the victim. And the receiving bank typically doesn't hold the money for very long, because the scammers know that you want to get the money out of the receiving bank and move it on somewhere else. And so the receiving bank will not have the money, but they have been sued in a couple of these cases, so we need to look at the law relating to both paying bank and receiving bank liability. So it's a big deal in terms of, it happens a lot purely within the UK. I mean, I got phoned by a scammer just a couple of days ago, and he obviously had a Scottish accent. I could tell straight away with a Scottish accent. So he wasn't phoning from some remote part of the world. No, he was quite close to home, I would guess. Certainly his accent was. And so it's not something that's, I don't want to give the impression it's totally happens in more corrupt countries. It happens here too. And presumably without the authorities' cooperation here, I assume, but you never know. So, as a third bullet point here says, so bad has this problem become, and so numerous have been the complaints by the victims to the Ombudsman and the banks and the government, and the media takes it up, that the government was moved to make a statutory provision, which they were able to do without actually passing a new law. They were able to do it by amending the faster payment rules in the 2013 Financial Services Banking Reform Act. And they said when a scam payment goes from one UK-based account to another UK-based account using the faster payment system, which is just the general everyday interbank domestic payment system, or the CHAP system, which is the one that you pay more for, which costs about £20 per transaction. It's slightly quicker, tends to get used for the final payment of housing and property purchases. So if the scan payment goes from one UK institution to another UK institution, and it goes via the faster payment system or the CHAP system, which almost certainly would have done, then these new rules apply. And we'll see in a minute what they say. In fact, we'll see right away what they say. So remember, in the first set of slides, I took you through the various definitions. You've got consumer, and another one is the micro-enterprise. The micro-enterprise is the trigger for the BCOBS rules to kick in. And it's also the trigger for these APP fraud rules to kick in. And it came into force on the 7th of October 2024. It's not retrospective, so any scam payment that took place before that is not covered. But if you're lucky enough to be the victim of a scam and these rules do apply, then you get your money back from the bank, so from the two banks involved, that's the paying bank and the receiving bank, within 5 working days, which is pretty good. But there's still the grossly negligence rule. So just as you have the gross negligence being relevant in the payment card theft scenarios, so you and the other general internet banking fraud, because APP fraud isn't the only way that people get scammed. But if it is an APP fraud, then if you've been grossly negligent in being scammed, then you don't get nothing. If you have not been grossly negligent, and remember that means more than just negligent, well, there's a certain amount of legal doubt about that, but that, as we saw in the cases last week, but almost certainly grossly negligent means a higher level of negligence than just plain vanilla negligence. So if you've been grossly negligent, then you don't get your money. But if you've been negligent, but not so negligent to be grossly negligent, then you do get the money back. But the banks can deduct £100. But that's not too bad, because you've probably been scammed for about £60,000, so losing 100 of that is not going to be a big problem. And the rules also introduce the concept of the vulnerable person. Now, this is not a definition which we're familiar with in banking law or anywhere else in the civil law, really, I think. So if you are a vulnerable person and you get scammed, you can be grossly negligent and still get your money back. Well, on the scale of negligence, though, how far you can go, I don't know. I mean, anyone can be plain negligent and win their money back. The average person, they're getting their money back stops at the gross negligent point, and the vulnerable person, well, no, they push on into the darker regions of negligence and can get their money back beyond that. But whether they can just be totally negligent, we don't know. It just says that the standard of care on the part of a vulnerable person is lower than the standard of care that the rest of us owe. And they don't have to pay the £100 either, the vulnerable person. The maximum payout is £85,000. Yes. Nice and loud, please. Still not getting it. Still not getting it. I need it loud.
Is the vulnerable person, does it include like underage, or does it only include like disabilities? Does a vulnerable person, is it underage or does it include people with disabilities? Is it 16-year-olds and under, like underage, or is it people with disabilities?
No, it just says vulnerable person. It's not defined. It almost certainly in this context means older people. But it could be a younger person who has poor mental health, I guess, quite plausibly. You know, whatever you would ordinarily mean by someone who's vulnerable. Somebody who's not doing an LLM. They're all vulnerable. So the maximum payout on this scheme is £85,000, which of course coincidentally is the same as the maximum payout on what? This was in the first set of slides. It's the same as the maximum payout to depositors of insolvent banks under the, what's it called? Financial Services Compensation Scheme, FSCS. If your bank goes bust, 85,000 is the maximum that the government will give you. Never ever keep more than 85,000 in one bank. Now, as you will see from these cases, that is quite a serious problem because the typical amount scammed is far in excess of 85,000, and therefore 85,000 is nice, but it's not an awful lot. It's by no means totally great if you've been scammed out of $1 million. And the other thing that these new rules say is that this, whatever the payment is, maximum 85,000, has to be shared 50-50 by the paying and receiving banks. Now, this is obviously a major cost for the banks, but this is the law.
Excuse me.
Yeah.
Example for the one
Sorry, I'm really deaf to them.
No, I'm saying for the example for the 1 million, what happens to
Oh,
that
it's like
the example for the 1 million?
example what?
The example for the 1 million you gave.
Yeah.
Yeah, what happens in that situation?
The victim, assuming they qualify, gets 85,000 and no more.
They can't do anything else in that sense, right?
Well, they can, we shall look at the cases on taking a civil claim against the bank's concerned, and that could get you the whole million, yes, conceivably. This is just a scheme that operates to grant a sum of money regardless of whether you've got any civil law claim against the bank's concerned. You could have an absolutely hopeless case against the bank. That doesn't matter. If you come within these rules, you get your money from the government, basically. Now, you come within those rules, you get the money from the government. But, well, I mean, the money really comes from the banks, but you get your money under a government scheme. You don't have to sue a bank to get it. So, obviously this change in the law was triggered by a growing number of cases that were coming up. And the government thought, well, maybe we'll just have a scheme that pays out regardless of, as I say, of civil liability on the part of the banks. So we're now going to go through the cases. Now, obviously the cases are still relevant Because one, you could be needing a lot more than £85,000. Two, you can have a payment that went out of the UK, and that's very common. If the bank payment goes out of the UK, you don't get nothing under the government scheme. Or three, you could have been grossly negligent, and therefore you don't get any money for that reason. So obviously the cases are still highly relevant. And the cases all date back to a rather obscure case from 1988 called Barclays Bank and Quince Care. Now, the internet is a wonderful thing because of many things, but it's also a wonderful thing in the sense that the banking law textbooks before the internet were the only way you could get any information on what banking law was. You couldn't do a search, obviously, because there was no internet. The other way you could get information was by looking at the cases. But not all cases got reported. Now really every High Court case is going to get reported online. That was not the case. Reportage of a case depended on a law reporter showing up at the court and taking notes and getting a transcript of the judge's judgment. Now they would always do that, obviously for any, what was then called House of Lords, now is Supreme Court. They would always do that for any Court of Appeal decision, but they wouldn't always do it for any High Court decision. And they certainly wouldn't do it for any County Court decision. And this was really a little bit corrupt, to be honest, because the authors of the textbooks were generally speaking working for the big law firms that specialised in banking law. And who were the clients of these law firms that specialised in banking law? The banks. And so it was, we all knew, in the banking law community, we all knew that textbooks like Paget's Law of Banking, which is the most authoritative book on banking law, was pushing their description of banking law in favour of the banks. They didn't want to write a textbook which was too favourable to the other side, And the internet kind of shattered all that, because you could suddenly get any judgment for free and easily. Now this case was heard in January 1988, but oops, they forgot to send a law reporter to this case. So it didn't get reported. So unless you were working for one of the banking law chambers, or big law firms that had a banking law department, it would be very difficult indeed to know that this case even existed, let alone what it said. But what it said was something really quite important and dramatic. But it wasn't something that the banks were very keen on people knowing, because it was liable to produce judgments against them, which will cost them a lot of money. And what Justice Steen said in January 1988 is in the second bullet point. A bank must refrain from executing an order if and for so long as the banker is put on inquiry in the sense that he has reasonable grounds, although not necessarily proof, for believing that the order is an attempt to misappropriate the funds of the company. Now in Quintscare Limited was a company, but this principle applied whenever you had an account which could be operated by someone other than the main account holder. Now obviously that always happens with a company, because the main account holder is not a human being and therefore can't do anything, although obviously the tech, arguably now you could say they could, but certainly not in 1988. So in 1988 it was all about signing checks, really. And so any payment from a bank account that belonged to the company had to be operated by the signature of a human being. And of course the bank would be given a mandate to say exactly which human beings in this world were entitled to operate that company's bank account. And if the bank got that wrong and paid out when someone different from an authorised signatory signed the cheque, obviously the bank was liable. If someone forged the signature of an authorised signatory, except for very limited exceptions, the bank would be liable, because there was no compliance with the mandate. That's all clear, right? The company, a customer is saying to the bank, if these guys authorise the payment of money, you should do it. Not only should do it, but must do it. If someone else authorises it, even if it's by a very clever forgery, then no, you're not allowed to. And this was one of the problems with signatures, is that the banks had to be, banks were under a legal duty to examine and scrutinise every signature on every cheque. And, you know, it was obviously possible to produce a forged signature, which would fool the bank, and then they lose the case. Now, you can have this scenario in any. You can have this scenario in any scenario. So, in other words, whenever the account holder is not signing the cheque or authorising the payment, then you've got a potential Quintscare situation. Now that can be a company account, it can be a partnership account, because if a partnership is 2 or it can be 20 people, anything less than the full body of partners signing the cheque gives you a Quintscare situation, because the one who isn't signing could be getting defrauded. It can be a power of attorney on a sole account. It can be a bank has received a mandate form short of a power of attorney, which can also happen where the customer says, my nephew can operate my account. He doesn't have full power of attorney, but he's been given a bank mandate. All these situations are authorised signatories, but who may be doing the dirty on the account holder and stealing the money for their own benefit. And this all blew up in 1989 in a case called Lipkin, Gorman and Cartnail, which is the reason, I think, why the Quintscare case finally got reported in 1992, because the lawyers, Lipkin, Gorman and Cartnail was a High Court case that went to the Court of Appeal and then to House of Lords, and so those lawyers were digging around for any conceivable relevant case, and they found Quintscare. And therefore Quintscare got mentioned a lot in the judgment. And that's what led the law reporters to finally, 4 years too late, do a law report on the Quintscare case. So in Lipkin Gorman, you had a firm of solicitors And they're based in London. I think they're still there. They're based in Mayfair. And the firm of solicitors had an account with Lloyds Bank. And there was a lot of money in it, and there was also a client account with a lot of money in that. A law firm's client account means it's money that 100% belongs to clients, not to the law firm. But the law firm control that money, and the law firm operate it the same way as they operate the partnership account, which is by authorised signatories operating it. Now, in Lipkin Gorman, the partners were numerous, because it was quite a big firm, let's say a dozen or more, and they had said to the bank, any one of us is authorised to sign cheques. Any one of them. Often partnerships require two, because that's a good way of reducing the risk of fraud, because you're far less likely to have two partners agreeing on a fraud than one doing it on his own. But solicitors obviously felt they were much less likely to be fraudulent, and they said, no, only one needs to sign. And they had a solicitor who was quite newly with the firm, whose last name was Cass. And he didn't take long before he started signing cheques for cash. This used to happen a lot in the 80s because there weren't so many ATMs. And instead of going to an ATM for £50, £100, he would sign a cheque for cash and cash it over the counter of the account holding branch. Now this man Cass developed a liking for gambling, and he went to the Playboy Club that was conveniently just around the corner and had a very nice casino. And he used to, pretty much every lunchtime, write a cheque for cash for either a £50 or £100 and spend the cash in the casino, where he generally lost the money. But some days he won. As it is with gambling, you don't lose all the time, you just lose enough to keep the casinos in business. And this went on for 1.5 years without anyone noticing, because it's relatively small amounts of money every day. And in fact, they never even noticed it. What they did notice was that he did a work trip to Newcastle and claimed an absurdly high amount on expenses. And they thought, ooh, this doesn't look right. And he was unable to give a satisfactory explanation. So the firm said, we're very sorry, Mr. Cass, we're going to have to give you notice to terminate your partnership. They gave him 3 months' notice. So he just carried on taking £50, £100 every day during the notice period, and then 1 month into the notice period they noticed what he was doing for the first time with these cash withdrawals, and then they instantly cancelled his authority with the bank and dismissed him as a partner. Now, one of the interesting things that came out of the judgment was that Mr. Cass was a devout Jew, and he presented himself to the partnership, and it was a Jewish firm of partners. They were almost all Jewish, I think. He presented himself as a very, very devout Jew. And when they had an office sweepstake on the result of the Grand National Horse Race, he refused to put in any money because it's against my religious principles to bet. And so it came to him as quite a surprise when it turned out he had been stealing money and gambling at the casino. Such is life. When he was rumbled, he fled to Israel to avoid any criminal prosecution. But that wasn't a good choice because Israel does actually extradite people to the UK, and he was extradited and he got 3 years prison sentence. But he did not refund any of the stolen money. In fact, he was basically bankrupt. And he had accumulated a theft that amounted to about £250,000 in that 18-month period. So, what does Lipkin Gorman, the law firm, now do? They do what every sensible law firm does in this situation, and it's not what you think. What they do is they claim on their insurance, because they got an insurance policy that actually covers them this kind of loss. So they go to their insurance company and say, you've got to pay up because we got a policy. We've been paying in every month for coverage, and that includes this. And the insurance company checked the policy and says, yeah, you're right, and they paid. Now, whenever an insurance company pays a loss, they acquire something called a right of subrogation. And this is very important to insurance companies because it means when they pay out on a loss, this isn't necessarily going to be a loss. Because by subrogation means the insurance company automatically, they don't have to be given it, they automatically, simply by being an insurance company and paying out on the policy, they automatically acquire whatever civil claim their policyholder had against anyone that they could have sued, but of course they didn't sue because they had an insurance policy that was a lot easier to claim on than going after somebody who might be liable. So insurance companies often bring cases in the name of their policyholder. As you'll see, it's Lipkin Gorman, the claimant, and not the insurance company. But it really was the insurance company. Lipkin Gorman said, well, we don't care, we got the money, do what you want. But it was all in their name, and they didn't show up in court other than where they had to give evidence to support the insurance company's claim. So the insurance company, in the name, using the name of Lipkin Gorman, sued two people. They sued Lloyds Bank for paying out the money, and they sued Cartnell Limited, that was the owner of the casino, for receiving the money. And in the High Court, the judge was shown this mysterious Quintcare judgment, and he said, well, it looks to me like this is a Quintcare scenario, and he was right, because this is not the full partnership all signing the cheque, only one partner was signing, so you've got yourself a Quintcare scenario. And secondly, he said, well, it looks like the bank here should have been a bit more careful. So they have this question of put on inquiry. So as he says, the bank has reasonable grounds, but not necessarily proof. That means there's got to be enough going on for the bank to say, oh, maybe we should ask a few questions here. Maybe we can be satisfied with those answers, but if they just do nothing, then in a situation where they've been put on inquiry, they have failed the legal test. So, when something like this happens, it's an evidential question of, is the bank really put on inquiry or not? And of course the court doesn't necessarily know, and so what happens is both sides get a retired banker to give evidence on what is normal banking practice in this sort of situation. And there was a man I used to know years ago who is long since deceased now, but he was retired at that time, and he gave evidence, and he said, well, the thing about this case is that this man Cass was a compulsive gambler, and you could tell it from his personal bank account. He said every banker knows a compulsive gambler's from his bank account. They got telltale signs, so he said, and he's probably right. Basically, the account's out of control. It's a mess. And a mess in a particular way that only compulsive gamblers do. And he said, because when Cass came to work for Lipkin Gorman, they said, well, we've got our account with Lloyds Bank round the corner, and why don't you open a personal account there as well, which he did. So all through this 18 months, his personal account was a mess, showed signs of being a compulsive gambler, and Lipkin Gorman, through the insurance company, said to the court, look, the bank should have put two and two together. Okay, so there was nothing necessarily suspicious about the withdrawals from the solicitor's account. But they should have looked across to his personal account and thought, oh, he's signing all these checks on the solicitor's account. Maybe we should ask a few questions, which they never did, you see. So the judge in the High Court said, yeah, that's good enough for me. I'm finding that the bank was put on inquiry, and because they didn't make any inquiries, they're liable. Judgment accordingly, £250,000 plus interest. Now, whenever something like this happens, the banks take great notice. Wow, this can be serious effect across the board to their bottom line, because we've now got a brand new case which costs them a lot of money, but they don't care about 30 million. They care about the hundreds of millions that could follow this. They think to themselves, they'll go into a huddle with their favourite KCs now, and senior partners in the relevant law firm. And what do we do? They are in a dilemma, because the big discussion is, do we appeal or not? They have the right to appeal to the Court of Appeal. They don't need any permission to do that. The problem is, if they appeal and lose, then they've created a really solid precedent against them. If they leave it alone, then, especially in those days, as I was saying before, there was no internet, they can kind of sweep it under the carpet as best they can and hope that no one notices. So that's their dilemma. So they went into their huddle in a darkened room and they came out and said, we're going to appeal. So they did appeal. They took it to the Court of Appeal. And the Court of Appeal said, we think the judge made an error in his judgment. The Court of Appeal cannot challenge the facts. They cannot challenge the evidence. The witnesses don't show up at the Court of Appeal and all give their evidence all over again. No. It's purely a legal analysis of the judgment issued by the High Court. And the Court of Appeal has to decide whether an error of law was made, given the evidence that was presented, which is now taken as gospel. So it's very important. A lot of bank lawyers will say, don't neglect these first instance decisions, because a finding of fact is made that might be wrong, but you can't challenge that because that's the evidence and the judge has given his ruling on the evidence. You can only challenge it if it's outrageously wrong, but no reasonable judge could have come to that conclusion, which is very unlikely. So, and what they will say very often is that the bank, back in those days, I don't know if that still happens, but when more things happened at branch level, the bank would go to a local firm of solicitors who weren't really that good at banking law, and they would handle the High Court case and lose it. And then it goes up to the more sophisticated banking lawyers, and they say, "Ooh, crikey, why didn't you tell us about this before? We could have had this handled a lot better first instance." Anyway, they did appeal and they won. And the Court of Appeal said, we agree that the bank can be put on inquiry, but we don't think in this case that they were put on inquiry. And so they got hundreds of payments to deal with every day. They can't stop and have a think about every single check that comes in. So unless there's something really outrageous, and they didn't agree with the judge that this linking of the personal account with the partnership account. They said, no, it's too remote. It was got to be something about this account. And it wasn't suspicious enough. The evidence that you got from the retired bankers wasn't anywhere near, wasn't strong enough to indicate the bank being put on inquiry. So the bank won the case. So that meant that the order in favour of Lipkin Gorman for the third of $1 million now gets cancelled. And worse than that, a costs order is now made against them, which previously was in their favour. And you've got a double costs order because you've now had two court hearings. And this all falls on the insurance company, of course, not Lipkin Gorman. So they had to think about it, and they decided they would appeal to the Supreme Court, House of Lords as it then was. But they didn't appeal on the Lloyds Bank liability. They appealed on something that hadn't really been dealt with very much in the High Court of the Court of Appeal. They appealed on the liability of the casino owner. They said the casino owner has given no consideration for this stolen money, and it doesn't matter that they didn't know it was stolen. Anyone who receives stolen money has to give it back if they didn't give good consideration for it. I don't know if it's still the case, but in those days, gaming had no consideration. It was a contract with no consideration. In other words, if you gambled on credit but didn't pay the bill, you couldn't be sued by the casino. And equally, if you won, they didn't have to pay. It was all honour only, basically. The casino said, whoa, hold on a minute, we didn't know. And as I say, they said, well, that doesn't matter. It was stolen money. It doesn't matter that you didn't know it was stolen. Irrelevant whether you knew. And they said, well, hold on a minute. We don't only have a casino here. We've got a restaurant, we got a bar, we sell drinks and stuff. So they said, all right, what's the evidence on how much money Cass spent on drinks and food? And the evidence was he didn't. He only gambled. All right, that doesn't work then. Then they came up with the idea, well, you don't put money on the table, you go to the cashier and get chips, and you gamble with chips. I said, but those chips are valuable because they can be used to buy food and drink. So we did give consideration because he handed over the stolen money, we gave him chips. And those chips were capable of being used for food and drink, as well as gambling. But as I said, the evidence was he never bought any food and drink, so in his case it appeared that was irrelevant. So the House of Lords came to an important decision that the casino was liable to repay all of the $350,000. So the insurers got their money in the end. Now, there's been the odd Quince-Care type of case over the years, but it suddenly blew up recently with the APP, what they call the APP frauds. Now, what we mean by APP, it stands for Authorised Push Payments. So that means it's authorised, not unauthorised, and it's a push payment, not a pull payment. Now, most of these scam losses arise in two ways. So one way is the scammer comes up and says, your money's at risk. It needs to be moved to a safe place. This is a very common scam thing. That's kind of an English one, as you don't get that much in other parts of the world. English people are obviously good at fear. So they're playing on people's fear and saying, you know, monies could all get stolen in an instant. We see someone's targeting your account. It needs to be moved to a safe account quickly. And then there's two ways that can happen. One way is to say, tell us your password, and you know, if necessary, the rest of the details, and we will move it. We will make the payment. That would be a pull payment, not a push payment, because the scammer is pulling the payment from the account. He's got the password, or he might get the password from, you know, hacking into computers or whatever. That is a pull payment. And pull payments are usually unauthorized, but they can be authorized. If the password's been obtained by hacking, then obviously that's an unauthorized pull payment. If the victim of the scam has willingly handed over his password, then you've sort of got an authorized pull payment, but it depends on how much he authorized, because he might not have authorized as much, or a withdrawal has actually happened. So it depends on the facts. But the other type of scenario is where the fraudster says, I don't want to know your password, no, don't tell me that. But here's the details of an account, a safe account. You move the money to that account. So it's a push payment because the victim of the fraud is initiating the payment. And it's authorized because he's authorizing it. Okay? So that's what we mean by authorized push payment. I've been talking a lot, so I'll take a little break here, I think, before we launch into the Philip case, because that's a big one.
Quand vous êtes content, hein? We're changing the next week. We're changing the next week. No, we changed it to next week.
What?
No, this week to cash out. So we change it to next week.
Oh, okay, you can. Yeah.
Next week?
Next week. Okay then. Next week everybody.
This week. She was also asking me for me.
It was my first time with the kids. It's so good.
You miss it?
Very much. Very much. I miss this. How he explains everything. Just like everything that he's saying. His explanation is much more clear. Yeah. Yes.
So next week. Next week. Makan.
The extra pieces.
Every Wednesday you've been catching people and promising them to come.
Last week, how far now?
Why is it
Last week,
not?
I never come.
Last week? Yes, it's the last week. I was on a
Never
plane.
come, yeah.
We're on a plane.
Yes, I was, yes, on the plane actually.
You change it to next week.
Yes, because
Next
everybody,
week.
yeah, next week, because everybody says that next week is hard for most people. How about you?
7th April.
7th April, okay.
They're paying me whenever.
Okay, yes.
We can handle
I can book a table
it.
actually. I can call and book a table. Because there are a lot of people, yeah. How many guests?
Just ask.
Honestly, make a group time.
Yeah,
No,
yeah.
I mean, only a few of us, they will check. You ask us.
How many people are going?
You ask 6 people minimum.
Yes, yes.
Rida, you coming?
Next week.
What?
He's taking church reservation.
It must be halal.
Yes, halal. It's going to be directly halal.
Huh? It's halal, halal, halal.
What's it?
Uzbekistan food.
Tuesday, next Tuesday, after
Why
class.
not? She's organizing the Uzbekistan food.
Yes, yes.
Uzbekistan.
Uzbek food. Yes.
Just write it on the board.
Are you in?
No, after class.
Tuesday, next Tuesday after class.
You're not free today, you're not free next week.
It's near here actually. It's at the.
Huh?
I know it because I love it.
I know it's organizer.
You've been asking everyone.
It's only
Yeah, okay. That happens. Yeah. Big people are not.
going to invite you.
It's not too good, right?
No, it's like it's actually it can be considered smart and dinner, but not but it is because it's not so great for some. So it's kind of yes. It's not a light food. It's not a light food. It's like a heavy food. It's okay. But there is not there. They don't put so. Okay. I don't think you're gonna be hungry after this. You never tried pork, right? Manti. Oh no, we should try that. It's all halal. It's all halal. It's so funny because oh really? It's very like here. We also я постоянно хочу тебе это писать, но скоро не хочу тебе понимаешь, что поэтому в этот раз у меня будет первый раз два английского, другой два, да? Причем еще даже я сейчас тоже не знаю. Это 11 мая. Это надо 21 мая еще должен быть ну да, чудесно, да, чтобы да, немножко а он уже 11 мая. Я должна сразу убрать.
Just phenomenon.
Да.
Just because it's platform, they can develop works with this work. With workers, they have different.
Я не знаю, что это.
We have to use it. Yeah,
Это когда мы послушаем, может, что полезно написано про Путина. Нюансы, знаешь, что я спросила? Мне естественно удобнее, когда в течение дня отвечать. Если все на месте,
they prefer it.
сейчас
They don't have to take contractors. And they can work as much as they want. Whenever they want. So for them it's more convenient. And as soon as you put it in this area, clear, transparent mistakes.
знаешь, как я туда попала?
For them it's kind of a good game. Because, I mean, they don't want to disclose because they see the benefits. But I mean, it's like everything is good. When everything's perfect,
Я
it's
просто реально, вопросы серии. Там же все пишут. Нет, там вообще не просто серии. Там цифры пишут слова, я не знаю, какой-то криминальный, прям текст какой-то. И там серия, не ели и выберите правильно яблоко, свет, там, знаешь, трамвай, да. Чувак, походу, ты реально хотел заработать. Вопрос, я помню, что я это только вот эти ответили. Ну, я считаю. Хорошее, да, хорошее кресло, нормальное место. А это там, где ты находишься зона комфорта, все равно интересно, да? Мне тоже много не нравится. На несколько курсов я так почему я начала говорить. Но это мне печально. Но парень работает полностью. И действительно важно,
Actually, she was the one. She asked me like what I do. I said I can either like change my subject a bit.
ну, понимаешь, ну сейчас, пока вот вся учеба и пока
Whatever is
и тем более, если есть компания, которая готова, ну, принимать учебу, то есть тяжелее работы. Это
Она же какой-то выход отсюда вообще. Нет, даже я. Моя подруга, одна моя подруга, когда ходили в ужас, ты понимаешь, что все равно человек просто по-другому раскрывается. И прям 100%. А я такой человек, супер домашний. После второго дня,
I told you it's not exactly the same.
Okay, so going back to the last slide 1 minute. So the third bullet point there is saying the Quint-Scare law, this rule that I've been talking about putting a bank on inquiry potentially, is limited to internal frauds. In other words, that scenario I said where you've got an account like a company account, a partnership account, a mandated sold account, any joint account, of course, qualifies for this potential internal fraud. But if you've got a straightforward sole account with nobody else involved, no joint account, no power of attorney, no company, then you can't have a Quint-Scare situation. This is what everybody understood from the Quint-Scare case, right? It only gets triggered, a bank is never put on inquiry by me if I've got one account in Graham Roberts' name. Doesn't matter how crazy the scenario, they do not ever get put on inquiry because I am the only person involved. Quint-Scare scenario needs someone else involved. A joint account holder, partner, other company and so on. Doesn't work with a sold account. That's how everyone understood it. And then along came the Philip case. Now a lot of these cases that I'm going to run through today, they're not an actual trial of the case. They are appeals from an application to strike out the defence, or I'd say appeal from a decision to strike out a defence, or an appeal from a summary judgment. This is because when you litigate in the UK, a complicated case like this is going to take a number of years, not a huge number of years, but it's going to take a couple of years to get to court, to get to a full trial. And you go through quite a lengthy and rigorous discovery process where each side reveals all their documents and so So it's increasingly common in big commercial cases for a party to say, I've made the claim, I've seen the defence, I think this defence is so far-fetched that it doesn't stand a chance at the full trial, and I want summary judgment. And you get a hearing as to whether to grant summary judgment. And if it's granted, then the other side may appeal it and say that decision to grant summary judgment was wrong. And that appeal can go all the way to the Supreme Court. So you go to the Supreme Court purely on the preliminary point of whether summary judgment was correctly granted. Or the other way that can happen is the defendant can apply to have the whole case dismissed or a part of a case dismissed, saying this case has got no chance of winning. Please chuck it out at this stage so we don't all waste months and spend lots of money going to trial where we can see right from the beginning it's a hopeless case. And that isn't necessarily the whole case, it can just be aspects of the claim. It gets complicated at the preliminary stage. But that's all good because the ultimate aim is to avoid a full trial if you don't really need one. So this was, so let me run through the facts of Philip. So Mr. Philip was a retired consultant doctor living in the Bristol area. And he had about £1 million in savings that he had with an investment firm called Tilney that operates down there. And they invested his money over the years to produce a return. It ended up being about £1 million. He banked with HSBC. Although he was quite old, he was quite recently married to a woman, Mrs. Philip, and she banked with Barclays. Now, Mr. Philip was phoned up by a man who basically told him a story which was like out of a movie. It was basically this guy who phoned up said, I am from the FCA. I think that's what he said, anyway, some regulator. And he said, I'm very senior in the FCA and we're very concerned about a fraud that's going on, a very sophisticated fraud. And they're targeting your money, not only in HSBC, but they're going to go after your funds with the stockbroker. And obviously funds with a stockbroker is not like a bank account. It's not a bank account in the guy's name. It's a broking account with shares in it that's in his name. And he said, this is so hush-hush, and the fraud is at such a high level, this is the fraudster speaking, and he's saying there's fraud going on at such a high level that we can't trust anyone. We can't trust the local police, we can't trust the regular people at the FCA. They're all in on it, or potentially in on it. So we've got to keep this purely to ourselves, not trust anyone. And it's very important that you move your money, and I'll give you the bank account details of banks in the United Arab Emirates, where I want you to send the money. And this Dr. Philip fell for this hook, line and sinker. And he decided that he'd better do what this guy said. And it was also presented to him like his civic duty. He must do it so that it could help other potential victims of the fraud. So he went to HSBC and said, I want you to transfer a big chunk of money out. And they did a couple of times. And when he asked them to do it a third time, they said, no, we don't like the look at this, we're not going to send any of your money out. Which, you know, it turned out to be a very good decision. But, you know, they were actually leaving them open to a breach of contract case by Dr. Philip, because this is the thing about authorised push payments, is that the bank it has to comply with the instructions of the customer. This is one of the basic tenets of the bank and customer contract, is that if I tell my bank to pay George Walker £10, they've got to do it. They cannot say no, assuming I've got money in the account. Anyway, HSBC balked at this after a couple of payments. So Dr. Philip then said to his wife, I say they were fairly recently married, that she was a music teacher, was described as not very sophisticated in financial matters. And he told her this whole story, and she just said, well, I trust you, Robin. His first name was Robin. He said, I trust you, you know, if you say this has to be done, we'll do it. So he said, well, I need to get Tilnes to sell all my shares and send that money to your account at Barclays, which up to then had very little money in it. And then you tell Barclays to send the money off to these bank accounts in Abu Dhabi or Dubai or wherever it was. So in pursuance of that, she went to her bank in Bristol, Barclays Bank in Bristol, and said, I want to do this thing. Now the fraudster had said, with a lot of details, if you look at you need to read the High Court judgments to get all the facts, which you don't really need to get the law, but it helps to paint the picture. But she, the fraudster had said, keep me on the phone while you're talking to the bank, so he could hear exactly what they were asking her and he could give her tips on how to respond. Basically, she lied to Barclays and said that she'd sent money to this Abu Dhabi bank before, which she hadn't. She'd never heard of them before. And so about 300,000 got sent off. And then another 400,000 got sent off to make a total of 700,000. All Dr. Philip's money, not her money, really, come from him. Meanwhile, he was talking several times a day to the very smooth-talking scammer, who was reassuring him this is all of great public importance. And as a result of Barclays being a bit nervous about this, even though they sent the money, they told the police, the local police. And a policewoman came round to the Philip house. And the scammer had told Dr. Philip, yeah, you may get a visit from the police, that may well happen, you forewarned him. So if this happens, they're in on it too, you can't trust them. Don't say anything to them. So he didn't. He told this policewoman, I don't want to talk to you, I don't need any help, please go, and she did. And apparently, the fraudster had a lot of tricks that no one can quite explain. It appears that when he called and he invited Dr. Philip to call him back at the FCA, and he gave a genuine FCA number, and Philip checked this on the internet. Yes, it was a genuine FCA number, and he called it, and he got through to the scammer. Says, well, no one quite understands how that was achieved. At the end of the day, £700,000 got sent away to the Middle East and never came back. Surprise, surprise. And who does the suing here? Who sues Barclays? Dr. Philip or Mrs. Philip? Who's got a contract with Barclays? Mrs. Philip, not Dr. Philip. So she has to do the suing. He can always sue in negligence, but it's a lot easier to sue in contract. So it's a lot, much more likely to win in contract. So she did the suing, saying to Barclays, you shouldn't have complied with my instructions, because you should have seen that this was an advanced, an authorised push payment fraud scenario. And they came out with a lot of sort of government papers and banking industry papers which have been circulating up to that point on exactly this kind of fraud. And said that Barclays should have been were put on inquiry, should have asked questions, didn't. Well, actually they did ask questions, but they were too easily satisfied with the answers. Although, of course, she had lied to them about paying that payee before, which didn't help her case very much. Meanwhile, Dr. Philip got a visit from an old friend. As I say, he's retired, so I'm guessing he was late 60s or older, and he got a visit from an old friend who said, look, I think you might be getting scammed here, and this doesn't sound good. You're refusing to talk to the police, you're refusing to talk to your friends. I can't talk about it, it's all hush hush. He'd totally been deceived into this being like out of a movie, and he kept talking about basically what we would now say between a rock and a hard place. He didn't like letting this guy down, he didn't like doing the other thing either, but he chose the other thing. So that's the factual background. So the High Court heard the case. So as the first bullet point says, Barclays said, kick this case out. They put in an application to dismiss the case, the entire case. There's nothing in there that could conceivably win, even if her version of the tax is totally accepted. She's still bound to lose. That's what they're saying. And they're saying that because it's not within the quince close parameters. Remember, there's no other person involved. It's a sole account. She told them to move the money, they have to move the money, however dodgy it looks. And the High Court judge said, yeah, that's right, I agree with you, Barclays, and he kicked the case out. So I think this case attracted the interest of the Consumers Association, and they started supporting the case by, amongst other things, employing David McElroy as a lawyer for it. So when this decision to strike out the case was appealed to the Court of Appeal, and the Court of Appeal reversed the first court decision and said, we think Barclays was put on inquiry. All hell breaks loose in the banking community. And oh no, it's just got an extended quince scare to a non-internal fraud scenario. And this can be, gigantic for bank liability. So they go into their huddle and they decide, shall we appeal? And And you can't appeal as of right to the Supreme Court. You've got to put in an application to appeal, but an application was likely going to be successful because this was a pretty radical decision by the Court of Appeal. But of course, like I said before, the banks are worried and the bank lawyers are worried. If they lose in the Supreme Court, then they've got the big daddy of them all saying the law's against them on this point. But they really don't want the Court of Appeal case standing. And they think they've got a good chance of winning because it's Court of Appeal lately has got pretty radical, actually. They come up with some pretty wacky stuff. So let's appeal it. So it went to the Supreme Court. And the Supreme Court decided, they reversed the Court of Appeal decision, so it went back to the original decision in the High Court, and they said, what's in the last bullet point there, it was held that a bank, the paying bank, has a strict duty to comply with instructions from a customer. Implied and statutory duties on the bank to exercise reasonable care and skill do not apply. In the first set of slides I talked about in providing a banking service, the bank has to do what any provider of service does under the law, Consumer Rights Act. It has to provide that service with reasonable care and skill. The Supreme Court said, not when it comes to paying out money from a sole account. Then there is no reasonable care and skill involved other than counting the money right and handing it over right. Nothing else they need to worry about. The guy wants the money, you give him the money. The guy wants the money sent to the Middle East, you send the money to the Middle East. You do exactly what he said. And if they don't do exactly what they said, they can be sued. They do not ever, ever, ever have to say, is this person being scammed? So it took, by the way, Dr. Philip about 4 days after he got a second visit from his old friend. And by the way, the scammer did a neat trick. He said, "Oh, Dr. Philip, you're being so helpful with this. We have a policy to make small payments to people who are very helpful." And the courier actually came round with £500 every day as a reward to Dr. Philip for losing £700,000. Yeah, after about 4 days, he finally saw the truth of what was going on, and happily, at least the last 300,000 never went. I think Barclays were getting really nervous by this stage, and they invented some reason to delay the payment, and by that time, Philip had seen sense and obviously cancelled the whole thing. And they wanted to get the 700 grand back, and Barclays said, there is something else actually on getting the money back, I think on a later slide, so I'll come back to that. But the big lesson from the Philip case is that if there's no element of internal fraud, like the Lipkin Gorman scenario, power of attorney or whatever, then it's a cut and dried case of no bank liability. So we have some other cases. Hamelin and Moorwand, High Court. Claimant was scammed into paying $160,000. You see straight away. Oh, by the way, the money that HSBC paid away only came to about 50,000, I think, was lost. But HSBC paid up for that. They didn't, let that go to court. They just said, okay, we'll pay that, which of course was under the 85,000. And I think that money actually went within the UK But the facts of this case were before the new statutory law came in, so there was no right to 85,000 in the Philip case because it was too early for that law to apply. HSBC, for whatever reason, they paid up and compensated him. But Barclays said, nope, we're not paying a dime. And they never did. And I imagine they never will. So a lot of the rest of these cases are investment fraud cases. So when us Brits are not being scared into moving money to the fraudster, we're being greedy and thinking, yeah, we can make ourselves a fortune here by falling for the scammers' promises of get rich quick. A lot of these cases are get rich quick scams. So Morwand, 160 grand was moved into a company's account with Morwand. So Morwand were the receiving bank. Now this is an important distinction, right? So the money went from some bank, I don't even have said here who that is. We're talking about where the money went to. So the fraudster has set up a shell company, that means there's nothing in it, it just owns nothing. And the shell company was opened an account with Morwand Bank, and the victim was scammed into sending 160 grand to the shell company account with Morwand Bank from where it got moved out by the scammers and was lost. So the shell company that was used as a vehicle to receive the scammed money, basically had nothing. It got 160 grand, 160 grand went out again, it's got nothing again. It went into insolvent liquidation and was wound up. So the victim in this case, who's Hamelin, he sues Morwand, saying that Morwand as a receiving bank has got a quid-scare duty. Now this again is untrodden territory because quid-scare Lipkin Gorman was all about paying back liability, not receiving back liability. And normally a receiving bank just says, what do we know? The money came, the money went, and we didn't know anything about a scam, and they're right. They've got no reason to know. But in this case, they had broken their own, and I think the FCA account opening rules by opening an account for this shell company in circumstances where they didn't ask enough questions, purely about the account opening, not about the 160 grand coming in. So the court said, okay, so what we got here is a receiving bank that opened an account without asking the full range of questions and getting the full range of information they would normally ask for and get before opening the account. And then you've got a rather unusual scenario, 160,000 going into that brand new account and disappearing again very quickly. Sorry, the court said, sorry, Morwand, but you've gone too far here. You should have, really, you shouldn't even have opened the account without the full information. And if you did, you certainly shouldn't accept an unusual payment like that and pay it out again. Now, I'm pretty sure Morwand is another of these preliminary ones. So I'm not saying this is the law. I'm saying that they had a chance of winning at trial. Hamelin had a chance of winning at trial. Then we'll have to go into the full facts of the case at trial. These preliminary decisions are all about, is there a triable case? They can only kick it out if there's no triable case. So I think what happened here was that the court was persuaded that there was a triable case, so they weren't prepared to kick it out at summary level. So, going through these cases, going back a few years now, but still pretty recent, JP Morgan Chase Bank became the banker to the government of Nigeria and do the regular banking stuff. Now, I'm not going into the full facts behind this case, it's just a one bullet point issue here. But so I'm not saying this is the case, but let's say the customer, that's the government of Nigeria, says to JP Morgan bankers, well, you paid money out to a fraudster who was an authorised signatory, but you should have realised they were stealing money from the government of Nigeria account. And the JP Morgan says, well, actually, this isn't a normal QuintsCare case because when we opened this bank account, we put in a special clause that said we will only be liable if we have been grossly negligent. So we say that we cannot possibly lose this case because whatever we did wrong didn't get anywhere close to gross negligence. It may have been enough to make us liable under the QuintsCare law, but because we had a special clause in our contract with the customer saying only gross negligence makes us liable, we can't be liable. And the High Court said, yes, you're right, JP Morgan, and they won the case. Royal Bank of Scotland and JP SPC4 went to the Privy Council because it was a case heard in the Isle of Man. The Isle of Man is not part of the UK, and therefore any appeal from their courts doesn't go to the Supreme Court, it goes to the Privy Council, but it's basically the same guys and girls with a different hat on, so it counts, and it's usually the same law. In this case, Isle of Man laws very similar, if not identical, to British laws, English law, so it's as good as a Supreme Court case, really. Now, in this case, you had a sole account, and the sole account didn't indicate any trust relationship. So let's say it's an account purely in the name of Graham Roberts, but actually that account's got £2 million in it, and that all beneficially belongs to George Walker, not me. But we put nothing on the account to indicate that. This can happen a lot, that for various reasons to do with tax avoidance or whatever, that people give money to somebody else and say, you put this in the bank in your name. And the sole account holder, that's me, I basically steal the money. So then George Walker says, hold on here, and I'm not giving it back, I've run off to somewhere where I can't be traced, and George Walker's suing the bank, saying they shouldn't have paid the money out to me. And the bank says, well, hold on, this was an account only in Graham Robinson. There was nothing about George Walker on the account. It wasn't described as a trust account. It was 100% a normal sole account. Now, obviously, this case cannot be framed in contract because George Walker doesn't have an account with the bank, and therefore he's not a customer of the bank, therefore there's no contract with the bank. He's got to frame it in negligence. Now, liability in negligence has got various dimensions to it, but the thing in this sort of scenario, the only thing that can make the bank liable is if they've done something beforehand, before the money gets stolen, whereby they assume responsibility towards George Walker. And they hadn't done anything like that, so out goes the case. What you want to keep careful note of here are these different scenarios. You've got Quinscare, which is a company account with a director stealing the money, authorised signatory. You've got Lipkin Gorman, the solicitor, authorised signatory stealing the money. This case, you've got the sole account, but the beneficiary, Philip, again, sole account. And some of the cases are against the paying bank, some of the cases against the receiving bank. So make sure you note those basic facts before you get carried away with what the law is saying. Because the law on the paying bank is going to be different to the law on the receiving bank. Larsen and Revolut, High Court again. Receiving bank again. APP fraud again. Now in this case, the money didn't get sent out of the UK. It got sent the stolen money or the scammed money went to an account with Revolut. Now Revolut have just become a bank, but at this time they were not a bank. So the decision was, of course, that you can't make a claim against a receiving banking contract because the victim doesn't have an account with a receiving bank. You've only got a contract with a bank you've got an account with. You can sue them in tort, and we saw how that happened in the Morwand case. And the other avenues for suing a receiving bank are assistance in a fraudulent breach of trust and unjust enrichment, which is a rather ill-defined concept. We're not going to have time to get deeply into that. In this case, the victim was tricked by fraudsters into sending 466,000 Swiss francs. A Swiss franc is worth almost £1. So you can see the amounts involved in these frauds are big, and a lot bigger than the 85,000 maximum, which is payable now, but wasn't payable then because these cases came up before or the facts of them occurred before the new statutory provision came in. The claimant was tricked into thinking he was buying shares in a company, and he just decided it was a good idea to send money to some random accounts that didn't have the name of the company he was buying the shares in, and off he sent nearly 500,000 Swiss francs to some account he's never heard of. They weren't in his name, they weren't in the name of the company he was intending to invest in. The money quickly went out, and he so the Revolut here was the receiving bank, and as such owed a lower duty than a paying bank. Well, that's one way of putting it. I mean, they don't have a duty in contract. It's harder to establish a duty in tort than it is in contract. So the judge said here, as far as the paying bank is concerned, not that they were the ones getting sued, he said they wouldn't be liable because this is a Quinscare scenario, absent the internal fraud. So, sold account, the guy says pay the money, the bank's got to do it, however crazy it may seem. Yep, so that's what I'm saying in the last bullet point. So in the fourth bullet point is saying the deceit of the third party is always irrelevant if there's a straightforward fraud on the sole account holder. It doesn't matter how much lies and trickery has been going on, as far as the case against the paying bank is concerned, or receiving bank, come to that, the guy may have been tricked, but he still gave a genuine instruction to his bank. Now, as it happened, purely accidentally, the victim here did actually have an account with Revolut. So he could claim to be, well, he was a customer of Revolut, and he could claim to have an account with Revolut, and he did have a contract with Revolut. But the court said, well, no, we're just going to disregard that, because the fact that you had an account with Revolut and you do have a contract with Revolut doesn't give you a right to claim in contract on a scenario which is completely removed from your account. You know, what we're saying here is that I get scammed, let's say, and I send money to Revolut from my HSBC account, and it just so happens I've got a Revolut account, but that wasn't involved in this scam scenario, right? So therefore the court doesn't know, okay, I've got an account with Revolut. That doesn't help me in any way to sue them in contract as a receiving bank on a transaction that's got no connection with my account. Yeah, I'm going to have to, so much here, I'm going to just concentrate on the main issues. Next case, Turner, DOO and Revolut again, High Court again. A Serbian claimant got deceived by a scammer, and they paid 700,000 euros into an account with Revolut again. Zadina Fashions was the scammer. No, sorry, Zadina Fashions was the account holder at Revolut. Now, unbelievably, the Serbian victim thought they were just paying an energy bill. One hell of an energy bill, it's 700,000 euros, but they were a business, so, you know, it happens, I guess. But they've been tricked. This scam was the fake invoice scam. And the Zadina account, but also they're paying an account called Zadina Fashions. Now, does that sound like a correct destination for an energy bill payment? So the judge said, the only way that the Serbian company can win this case is to use unjust enrichment, which is basically him saying, well, the recipient of the money didn't deserve it, to put it simply. Now, that raises the question, who is the recipient of the money? Well, initially, of course, it's the bank, because if you send money to a bank, if you send money to someone, the money goes into doesn't go to them, it goes to their bank and gets credited to them in their bank account. Now, the first set of slides deals with the fundamental issue that money in the bank isn't my money. I've got the credit balance of the bank, it's not my money, it's the bank's money. The bank owes me a debt that corresponds to the size of the bank account. And most of the time, this doesn't matter. It matters greatly, of course, as the bank goes bust, because it means I don't own that money. I've only got an unsecured creditor claim in respect to that money, not my money. And it matters here. Now, the judge said if you're going to win a case in unjust enrichment, you've got to prove A, enrichment. Well, yes, 700,000 euros did go. That's enrichment. At the expense of the payer, yes, the payer paid it. He went from his bank account, which is unjust and without any applicable defences. We've got another slide on that. Yeah, the decision. They said Revolut had been enriched by the transfer. Now this is another contentious area. Because Revolut said, what? This money went, okay, this money legally belonged to us, but you can't say we were enriched by it, because as soon as that money came in, yes, we became the legal owner of that 700 grand, but instantly a debt obligation was owed by Revolut to Zadina Fashions, who had the bank account. So that's not enrichment. But the judge said it was. Second bullet point, Matthews considered that Revolut was the beneficial owner of the funds and therefore still enriched. I mean, he's right, really, because you see, money in a bank account doesn't beneficially belong to me. If I've got £100 in HSBC Bank, they are the legal owner of it. They are the beneficial owner of it, not me. A debt is owed to me, but I've got no ownership rights either in legal or in beneficial terms. So that he's kind of, he's kind of wrong, but he's kind of right too. That technically, Revolut was the beneficial owner of the money, so it's all right. They have been enriched, but the other side said, no, that's just crazy. Common sense says that they haven't been enriched because they owe a debt obligation which is equal to the size of the money that they're holding. Now, that's as far as I'm going to take that little line of country. There is another slide on this Supreme Court 2017 case. I'll leave that with you. I'm not going to talk about that anymore. We're going to go back to the long list of scam cases. So CCP Graduate School. This is a school which actually trains postgraduate students like yourself. And the school had obviously done rather well because they had £415,000 lying around waiting for a good investment. And the owner of the school decided to invest it in a way that the scammers had persuaded him would be a good idea. So it's a company account, but it's very much a one-man company, and the owner of the company decided, I think he was probably the sole shareholder, and he just treated this money as his. He was also the only signatory on the only authorised signatory, so there was no way really he could dress it up as within the Quince care because he was the only shareholder, the only signatory on the bank account. How can he say that he's defrauding anybody else? Or how can he say that it's within the Quince care parameters of internal fraud? So he'd been deceived. He sued his own bank. His own bank was Nationwide. Santander was the receiving bank, so he sued his own bank. Now, the Philip case was at that point post-Court of Appeal but pre-Supreme Court, so this gave him great hope. But of course, the High Court here said, well, let's just wait and see what the Supreme Court says in Philip, and they, of course, said that they would reverse the Court of Appeal judgment, and so that was the end of that case because he couldn't show anybody else. It was just a one-man thing. So last year he took a case against the receiving bank, which was Santander, for the same £445,000. Sorry, 415,000. Santander went to the High Court for, went to what they call the Master for a striking out order of the case, of the claim. And the Master said no, he wouldn't strike it out, it should go to full trial. So Santander appealed the Master's decision not to strike the case out, still with me, and the High Court had to decide whether CCP had any chance, any realistic chance of winning the case. And he said no, they didn't. So he reversed the Master's decision not to strike out the claim, and the claim was struck out. And the reason being that as receiving bank, Santander had no duty in contract, because there is no contract when there's a receiving bank, and no duty in tort because there was no, so there might be if there was some special level of control that the receiving bank had, but they didn't. On we go, Court of Appeal, Giwa. This is a really weird one, the facts. A Nigerian guy had a lot of money, and apparently in Nigeria there's quite severe exchange controls, so you want dollars but you can't get them as much as you want. So he was attracted to the idea of going to a genuine FX broker and setting up some deal that evaded the Nigerian exchange controls, and he could get his Nigerian naira converted into US dollars. And it wasn't an outright scam. It was a genuine FX firm. And the guy he dealt with at the FX firm basically stole the money. So Giwa sued the firm and said, you're liable for what your guy did. And they said, well, no, you know, he came in here sometime, but he wasn't really one of our employee. They tried to kind of wriggle out of it by saying this guy was using their name for his own private fraud, but he wasn't part of the company. So this becomes an agency case. Now you're saying, well, it seemed to be that the company was right, that this is JNFX is the company that got sued. So they were right. This guy, they hadn't given this guy authority to do anything. So there was no actual authority. But of course, as we know in English agency law, you can have ostensible or apparent authority, and that's where someone is acting like he's got authority, but he hasn't. Now that doesn't automatically make JNFX liable, but they had done enough to give this guy legitimacy. You know, he had an email account that used the company name, for example, and they knew that he had that. So it was difficult for them to say that he had no ostensible authority to bind the firm in contracts, because they knew about him, they knew what he was doing to a large extent. And so Mr. Giwa won the case, having proved that ostensible authority applied. Now the defendants tried to use the Philip principle that a representee must make reasonable inquiries. In other words, they were trying to say that Mr. Jiwa should have not taken this guy at face value, you know, sort of put him under the bright lights a bit to question him on the legitimacy of his claim to be an agent of JNFX. But the court said, well, no, because there's no reason for him to doubt. You know, the guy had an email address. He had, you can read the case, but he had various other things that would just lead any reasonable person to assume that this guy was a genuine agent of JNFX, and so there was no duty on him to ask questions. Two English guys actually stole the money, and they disappeared off somewhere with the money and never came back. Right, well, we've finally got to the end of that bunch of cases. There is another angle here which is not explored in the slides, which I probably should mention, and it's called the derivative action. But actually that was the facts of Morwand. So remember Morwand, that's where this happened, it's on the slide, and Morwand's, Hamelin, the claimant, we saw how he won against Morwand. Another way of putting that is a derivative claim, because he's basically claiming on behalf of the shell company, which received the 160 grand and let it out again. So he's sort of saying, I want to acquire rights, derivative rights, that I follow where my money went, and then see the shell company can say that they can make a quick scare case, right? If you think about it, because the shell company is a company, and some fraudster set up the company, but the shell company, the argument goes, must owe some duty to Hamelin because they've just received £160,000 from Hamelin. So when the fraudster, who's the authorised signatory of the shell company, tells the banker to the shell company to pay out 160,000, that becomes a quid-scare scenario, because it's a company account. You've got an authorised signatory who is defrauding other people involved in the company. Only it's not a shareholder of the company or a director of the company. It's a creditor of the company who's being defrauded and has got an interest in the company's assets. And you see, this hasn't been fully settled, but this is an obvious way that some scenarios could leave the poor scam victim with a claim. If it goes like this, you can say, well, I want to adopt the rights that the shell company has against the scammers. I want to adopt the rights that the shell company has against the bank, where the shell company had an account, and claim against the bank for saying, well, if the shell company was suing the bank, the shell company or some other director of the shell company was suing the bank, they would have a very good case, because it would say, well, that's a pure quid-scare scenario. It's bang on quid-scare. So the question becomes, can the victim of the scam acquire derivative rights against the bank? In other words, because the shell company had those rights, can the scam victim say, well, that was my money, let me follow the money and acquire the rights that the shell company has against the bank, but it isn't interested in pursuing it because it's gone into insolvent liquidation, as I said before. Whew. Any questions? Well, before we finish, it would be quite interesting to see all of these cases. The facts happened before this new statutory provision came in. So we know what this new statutory provision says. Would Philip get any money back, or Mrs. Philip get any money back under the new statutory provision? No, why not?
She's grossly negligent. She's grossly negligent.
So what?
She's grossly negligent. No more? She's grossly negligent. That's why she.
Well, yes, that's right. Because she lied to the bank, yes. But there's another more obvious reason why she wouldn't get the money back.
External fraud.
No. Well, hold on. External fraud's irrelevant to the statutory claim. You know, if you've been scammed and it's APP, you get your 85,000 external fraud or not. This whole external fraud point is all about the Queen's Care liability, and that's all about a civil claim, not about a claim on the government scheme. There's a reason why there's no way Mrs. Phillip would have got a dime from the government scheme had it applied at the time. Why? Because of where the money went. It went to the UAE. It didn't stay in England. The money's got to stay in England under the government scheme. Both paying and receiving bank must be English. All right, let's go through the others. Hamelin. Would he have got any money under the government scheme? As far as I know, the Morwind account was in England, so we haven't got that problem. He could well have been grossly negligent, but we don't know enough about the facts to say that could be a problem. He'd only get 85 of the 160. In fact, he would only get 84,900 because remember, you lose 100 unless you're a vulnerable person. That's all we can say about Morwind, I think. Not relevant to the Nigeria case, not relevant to that case. Larson. Because Revolut operates outside the UK, so I think the receiving banks here were non-UK, but I'm not sure actually. If they were non-UK, obviously he wouldn't get the money. Could well be gross negligence again. Next problem. The amount he paid was way over the 85 limit, so the best he could hope for is the 85. That's about all we can say about that one. Turner. I believe that one went outside of the UK, so that would sink that one. Another thing that may well sink it is, remember, you've got to be a consumer or a micro enterprise to get anything out of the government scheme. So this was a company, well that's okay, but it's got to be a small enough company to be categorised as a micro enterprise, otherwise they get nothing. If they do get anything, again, the 85,000 is a small proportion of the money that was lost. Any more? Oh yeah, CCP. Well, he starts off looking a little bit better because the money stayed in the UK. So, but of course it's a company account. So if the company's too big to be a micro enterprise, then that's going to rule him out. Subject to that, subject to the gross negligence point, he could get an award under the new law, but of course he's way under, the new award maximum is way under the amount that he lost. 85,000 is the maximum.
Sorry, I'm getting a bit confused. When you say it stays in the UK, are you saying that when it's transferred to a bank, even if it's an international bank that's also in other countries, it stays within the currency of like in pounds?
No. If
Okay.
it goes outside the UK, you can't claim under the government scheme. It has to be within the UK faster bank process payment.
So if I am at maybe HSBC bank account holder, which is obviously a worldwide bank.
Yeah.
If I get defrauded, and I'm in Dubai, but my account is opened with a UK branch, does that apply to that?
If the money goes from the UK to a bank in the UK, you're within the rules of the scheme. If it goes to an HSBC bank in Dubai or Singapore or anything, no, you won't get nothing.
You mentioned earlier that the 85K was tied to the FSCS, or it was the same amount.
Yeah.
But the FSCS, that limit went up in December to 120,000. So I'm
Oh,
just
very
curious,
good.
like,
Very good.
are they
Yeah.
going to match it, or is it like irrelevant?
They're not as, well, I mean, researchers, let me know. But I haven't heard that this has gone up with that. Is that right? I didn't know that.
Yeah, it went up in December. It's because of like the EU laws and stuff. It went up to 120.
Well done. Extra mark for you in the exam. Okay, anything else? All right, well, I think we'll wrap it up there then. I've done a lot of talking. You've been very patient. So it's been a pleasure teaching you. Wish you every success in the exam and your careers. And you have any questions, you know how to contact me through QM+. Welcome.
Thank you.
You must come. You cannot. You can fly back.
Did you actually get them?
You always don't get.
Not always. This is time. This is time. Because it's not small.
She's asking next week. You okay?
No.
Next week.
Next week.
Next week on Tuesday.
What time? Same time?
Yeah, after. Like in total,
Marsha, are you coming next week? Next week.
By myself in the library.
1, 2, 3, 4, 5.
what meeting do you have?
Same time.
Actually, they tried it.
7, 8.
I wasn't expecting it. I'm missing the revision. I almost did.
Last time was hard work.
You want to eat together next week? Same time.
I mean, like, four days you do like work.
For three recognition?
Yeah.
4 days.
Who said that? Is it online?
I saw it.
Okay, then.
It's online class, is it? Next week.
When did they say that?
When did you say that?
Not securities.
Oh,
not securities.
Okay, so which one is online now?
Not online. I think they will. Arbitration.
No, I thought this is me on I guess it's like
Nice.
and it got a match on top.
Okay, we're gonna do over now.
That was
Okay, then.
But you may have more people.
I seen it.
Because
You didn't get coffee.
No, they have a space. Next week.
let's go on.
No, yeah, they can.
Well, same. Like, I think pretty much same.
Okay, guys. So yeah. No.
I haven't seen tops like this before. And not like that. Okay. If the pink is just like dresses, you know, like those dresses you see in the shop, you just go and bring it. Yeah. You just go and bring it and they charge you like $5. Like print shop.
I was worried she was going to be I thought this was for school. I don't really have any, I don't think she has to print. She never has to print anything.
I think they use like a paper dissertation on the
Oh yeah, the one in FinTech. I don't think I want to.
No one was talking about like how
I know, right? I'm trying to think. And then don't really think, and it's not even an insult.
no, it's true.
And I hope you know that everything ends. I hope everything ends because it's a whole secret thing. I remember him when he had the classification. Exactly. But now no one has to. Exactly.
But I do think it's
And then I forget it. Same. True. I think when it's exams, I just have to plan. I don't remember everything.
I'm just coming to class.
Same. So start planning and everything because it's
Because I know myself as well. Like when I'm on vacation,
mm-hmm.
I can do I can do preparing for work, which I really like.
Mm-hmm.
So I can do like 2 days of theory and then planning 2 days of practical.
Mm-hmm.
I got it right.
Mm-hmm.
What's the word? Dissertation.
That was me. Like even I think I need pressure under pressure.
I need pressure.
And I don't think that's a good habit. I work under pressure sometimes.
If there's no
Once it's
pressure,
closer, I don't know, like first week of school, first week, second week of the new school starting, I don't know. Into
but I'm making sure I'm following.
yeah,
Like there's a
just
program
so
is
when
that
I'm
I'm
reading
on.
again,
Yeah, and I'm prepared. So I'm not gonna like read things from like short papers and exams. But I
no,
already
no,
know it
no.
and I've checked.
Or it's just that I'm not going to read again. Because I just feel like I need a bit. I need to feel like, oh my gosh, oh my gosh.
And I get it done.
I think that's my best motivation.
But I'm glad you get it.
No, I get it. That's actually my best motivation. Because once I commit to that pressure, nothing doesn't work. It doesn't work. I'm just done with this courses. Sometimes I feel like I'm wasting my time studying.
Because you're actually impacting people in life.
Exactly. Like I'm wasting my time studying for exam. Mm-hmm. Mm-hmm. Oh yeah, because we're still talking about food. What's the
That
choose
was
that
the
one
last
then?
thing. Truthful confusion.
Okay.
But it's
very